Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we had a double top at the all-time high today. SPY, this is adjusted for the dividend, rejected by 1 penny. The SPX, the S&P 500, rejected by just over $1. So a clear rejection. And then we had the alert, probably got it on your phone if you're in the US here. And it was a test, a presidential text alert test. And this is a good tweet, whatever you call it, pointing out the dump that ensued after that. It looks like the algos did not know it was a test. So that seems to make sense for me. I was searching for news, what's going on. People highlighting, a rumor that China is selling treasury notes. That would certainly do it. But the way that this is timed certainly looks like algos were not aware that this was an alert and a test of the alert system. Interesting to note, a little bit frightening as well. SPY on the daily, bulls in full control as long as the higher lows hold. The first red flag will be if we break 290.98, which is the low of the week. And the next level is 289.41. That is the level for me. If you hold 289.41, the bulls are just fine in my opinion. You break it, and then we can start talking about bears. Weekly time frame, still all bulls. We know we're due for consolidation. When you ride the exponential moving average this far for this long, you look for a pullback. That being said, the last time we dumped from the pullback, it was a lot more extreme and fast of a move. This is a lot more slow and steady. Doesn't mean we can't dump, but again, as long as the daily higher low holds, it's all bullish. IWM trying to bounce. IWM is getting dragged down by the weakness in the biotech sector and the correlation to the healthcare sector. And we're looking for a lower high on the daily compared to 169.32. Anything under this level is just a lower high. So while it's a solid day today and a nice bounce, we have to change the daily trend to be looking for the weekly higher low to be established. And at this point, we have pulled back enough on the weekly chart that we have to be cautious of a trend reversal. If we bounce and then set a lower high and then lose the higher low pattern, that would be the first break of the weekly uptrend since this equilibrium broke bullish way back when. So we are going to be watching out for that, but we are still holding the daily or the weekly higher low pattern, 163.64, and that held by about 50 cents or so. So daily trend needs to change. Then we'll look for the potential of that right shoulder forming on the weekly time frame. So bulls need follow through is the bottom line. QQQ on the daily still holding up just fine. Daily inside bar with 185.66 support and 186.97 resistance. If we get a bull break, all-time high is next. If we get a bear break, 185.32, and then we're looking down to the daily middle Bollinger Band essentially after that. So QQQ bulls certainly still in full control. We did break that all-time high by a decent enough amount that it was clear. And now we're struggling with the upper Bollinger Band resistance. The financial sector started to bounce. It formed an upper wick of profit taking. Same thing. We need the daily trend change with a higher low and then continuation to higher highs. And that would be a big sigh of relief for the market bulls. So in the scenario that we've been in, it's been the financial sector weakness, tech sector strength, and the market's been trading sideways to a certain degree. So it's pretty much either the tech sector is going to go bearish and the market's going to go bearish, or the financial sector is going to go bullish and the market's going to go bullish. And that's what happened today. The financial sector went bullish, but we do need further follow through, and we need a more convincing new all-time high because of that double top rejection. VIX on the daily chart continues to show weakness. It's just not doing anything for the bulls. The daily middle Bollinger Band rejecting the price a half dozen times in the last 2 weeks, and the weekly time frame not doing anything. And inside bar last week broke bearish. Not a lot of bearish follow through, but again, really the bulls don't prove anything unless they can break 1322 and 1375. So the bottom line is, again, it's just very simple for me. A lot of people are looking at fundamental things and they're looking at little clues and divergences and all that, but it's just price action. If you hold the higher low, the bulls are in full control. It's just a very simple mindset to be in. And then we can talk about bears and we can talk about reversals and dumps and crashes and all that when we lose the daily uptrend. That's when it's time to start looking bearish, in my opinion, because it's not like we're going to see a ton of downside and then a bear break. The bear break's not too far away. So it's about 1% away before that bear break would occur. So I appreciate you watching, and we will see if tomorrow the bulls can recover, and if that was just a little bit of a fluke, in terms of the reaction the algos had to that alert test.